Hey everyone, welcome back to Corporate Decoded, the place where we dig into the nitty-gritty of corporate filings and try to make sense of it all. This latest report from Fidelity Revere Street Trust has some seriously big numbers that I think you are going to want to hear about. And by big numbers, I mean billions upon billions. Alright, so we are looking at a report from the 30th of November 2025, covering the previous 6 months for the Fidelity Revere Street Trust. This trust is basically a holding company for various Fidelity investment funds, and this report gives us a snapshot of 4 specific ones. They are Fidelity Tax-Free Cash Central Fund, Fidelity Securities, Lending Cash Central Fund, Fidelity Municipal Cash Central Fund, and Fidelity Cash Central Fund. Think of them as different buckets where money can be parked. Let's dive into the Fidelity Tax-Free Cash Central Fund. This fund is all about keeping money safe and accessible while it earns a little something. As of the 30th of November 2025, this fund had almost $3 billion in size. That is a huge amount of cash. Now, what is this fund investing in to keep that money safe and accessible? Well, as of the end of November 2025, almost 100% of it was parked in very short-term investments. Specifically, about 81.7% was in something called variable rate demand notes, or VRDNs. Now, that sounds complicated, but basically these are very short-term notes that can be paid back really quickly. The rest, around 18.2%, was in something called tender option bonds. To give you a better idea, these VRDNs were mostly invested in across different states like Alabama and Arizona, and the amounts were quite large. For example, the Alabama Infirmary Health Rev participating VRDN alone was valued at over $5.7 million. These are the kinds of investments that these money market funds use to stay liquid and stable. Next up, we have the Fidelity Securities Lending Cash Central Fund. This one is a behemoth. At the end of November 2025, its fund size was over $28 billion. Yes, you heard that right, over $28 billion managed by this single fund. So where is all this money going? Well, this fund is heavily invested in repurchase agreements at 47% and United States Treasury obligations making up 39.7%. Repurchase agreements are like short-term loans where securities are sold with an agreement to buy them back later at a slightly higher price. It is a common way for large funds to earn a bit of extra return on their cash while keeping it relatively safe. The United States Treasury obligations are considered among the safest investments in the world. About 11.9% is in time deposits, and then there is 4.3% in commercial paper. So overall, this fund is built for stability and income generation. Looking here at the repurchase agreements, they have a lot of them, and the values are massive. For example, one line item shows a repurchase agreement in a joint trading account at 4.08% dated the 28th of November, due the 1st of December for over $5.3 billion. This shows the scale we are talking about. Let's move on to the Fidelity Municipal Cash Central Fund. This fund is designed for investors who want tax-free income. As of the 30th of November 2025, its size was over $3.3 billion. This fund is also heavily focused on safety and liquidity. Almost all of its assets, around 99.8%, mature within 7 days. The allocation is quite similar to the tax-free cash central fund, with 71.4% in variable rate demand notes and 28.4% in tender option bonds. This structure is ideal for a fund focused on municipal income as it provides stability and consistent returns, while potentially offering tax advantages. The schedule of investments shows a lot of municipal bonds from various states. For example, in Florida, there are many variable rate demand notes contributing to the fund's holdings, and the total Florida holdings for tender option bonds alone are over $212 million. These investments are diverse geographically to spread risk. Finally, we come to the Fidelity Cash Central Fund. This is the largest of the bunch by a significant margin. As of the 30th of November 2025, its fund size was over $57 billion. This is a massive pool of capital. Similar to the Securities Lending Cash Central Fund, this fund also leans heavily on repurchase agreements at 45.8% and United States Treasury obligations at 42.8%. It also has 10% in time deposits and 4.1% in commercial paper. This strategy is all about preserving capital and providing steady income. It is a common choice for institutional investors looking for a very safe place to park large sums of money. The numbers here are staggering. The total for repurchase agreements is over $26 billion, and the US Treasury obligations are valued at over $24 billion. This highlights the fund's core strategy of investing in highly liquid and secure assets. Now, this filing as a whole tells us a very clear story about Fidelity's money market fund operations. They are managing enormous amounts of cash for institutional clients, and their strategy is overwhelmingly focused on safety and liquidity. They are not taking massive risks here. They are primarily using ultra short-term investments like repurchase agreements, US treasuries and highly rated commercial paper, and these variable rate demand notes to keep the money safe and accessible. The massive scale of these funds demonstrates incredible trust from their clients, and their investment strategy reflects that trust by prioritizing capital preservation. The main takeaway is that Fidelity has built a robust system for managing cash for large institutions. The numbers are astronomical and the strategy is conservative. It is a business that thrives on scale and efficiency, and these reports show they excel at both. Alright, that is our breakdown of Fidelity Revere Street Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.